A Look at Finance is underwritten by Janney Montgomery Scott, trusted advisors for generations.
Hey, welcome back, everyone. Well, it's Thursday, so Steve Carlton, first Vice President
Thank you.
of Janney Montgomery Scott, the investment firm, is here to discuss all things related to finance. We're going to get right to it today because a report came out today on the national retail sales numbers. And that I find is always a little bit confusing because I don't completely understand what that means. So I thought we'd just start there, Steve.
Sure.
What's this report mean?
So we've been talking about retail sales all this week.
Right.
We had Macy's come out yesterday. We had Walmart today talking. JCPenney, a number of other retail stores are going to be coming out this week. And what we're looking at is consumer spending, discretionary and non-discretionary spending, and how is it tracking? Is it growing? Is it expanding through this year? Or is it contracting and flat? And so the numbers we were seeing is forward guidance. What they're saying about third and fourth quarter of this year is that they're expecting it to be not quite as strong as the market had anticipated.
Now, when with just a slight clarification here on spending, there's discretionary spending and non-discretionary spending.
Yes.
Even though it might seem obvious, just a quick clarification.
Discretionary spending,
Yeah.
your iPhone,
iPads,
your
right,
iPads.
that's right.
Non-discretionary is your bacon and eggs, the gas in your car, things you have to have versus like to have.
And these numbers reflect both sides of that equation?
So we're seeing inflation is eroding consumers' ability to spend. And so, they choose to shop at different stores, they choose to buy less items than they necessarily would, maybe skip on name brands and go for the discount names. And so the psyche of the consumer seems to be pulling back and slowing down, not growing at the rate that we would like to see.
Well, you know what? I look at it, and maybe with short term, but I'm looking at back to school campaigns that are going on.
Right.
I'm not seeing as many of them.
You're right.
When you go to shop at any of the stores, a lot more sales are involved right now.
Yeah.
Seems to me on the business side of it, on the retail business side of it, that they're doing everything they can to stimulate activity. That would be an indication to me that that's pretty flat.
Yeah, as stores become more aggressive in their sales, when you see more and more stores offering 30, 40, 50% off, if you're getting in your emails all these sales from these different retailers, we talked about this 3-4 months ago. And I said,
Yes.
if the numbers don't improve, we're going to see retailers have to become increasingly aggressive. And you're right, the back to school is critical for those stores, those box stores. And how they do in the next 3, 4, 5 weeks is going to be a really strong indicator. So the numbers are mixed. They're not as good as we'd like. It's not doom and gloom, but this is one of those things where there's this tug and pull back and forth with the market.
Now, last week you had mentioned that, the stock market seemed to get ahead of itself a bit. And, rising, occasional down day, but rising.
Sure.
And if it does get ahead of itself, that it has a positive effect on things like the interest rate.
Yeah, you're
Right?
absolutely, yes.
Right.
So the stock market, there's enthusiasm and there's pessimism and there's tug of war between the bulls and the bears in the market.
Yes.
And I think the market had expected a growth rate that maybe was a little too optimistic. And so we're seeing something happen in the long bond. Today it went to 3.2%. That's the 30-year Treasury. That's really low interest rate. That goes back to about 15 months ago now. So what does that mean? That means consumer debt, such as credit cards, car loans, mortgages, refinancing lines of credit, those kinds of things, those interest rates are going to be lower than what we'd expected them to be when we were looking at this first quarter. If you remember Janet Yellen, we were talking about raising interest rates
Yes,
and
right,
the
right.
effect of that
Sure.
on the consumer. Because the consumer spending isn't as strong, I think there's a lot of interest in keeping those interest rates lower.
Well, when I was checking on this today with somebody, they mentioned that interest rates for mortgages might get in that 4% range.
They're there.
They're there.
We're
Okay.
seeing it. We're seeing it in the last week. I've been talking to a lot of the mortgage brokers, a lot of the banks, and we're seeing 4% for somebody that's reasonably well qualified, and the banks are writing these loans. So the real estate market, although it's been a little weak and a little soft, locally it's been doing very well. And so that's an incentive for people to take a look at it. If they didn't refinance from a few years ago, thought they missed it, now it's not too late.
And that would affect other larger loans, car loans?
Yeah. So the car loan is more aligned with LIBOR, more with the 10-year Treasury, shorter term rates, because typically
okay.
cars are like 72 months, 60 months, 50, those shorter terms. But even so, people are getting car loans at 0% for 72 months. I saw it, on the television. The ads are everywhere. So that's a great incentive to drive sales. But that's indicative of interest rates being pressed low because the economy is not taking off quite as well as we thought.
I got you. Now you figure if we're just since we're talking about the automotive category, it's clearance time for them too. They're trying to move out the 2014 models.
Yep.
So these added incentives and probably a good interest rate. So pay attention if you're thinking of buying a car. Might be a very good time
Absolutely.
to go out and. All right, with all of this information that's coming in, I mean, you're the expert. You're the financial advisor. Generally, you're explaining pretty much what's going on. Specifically for Saratoga, Warren, and Washington County, any variation on this theme?
Yeah, that's a good question. When I look at this community, it's very, very different. I've used the example of like 3 legs on a stool. Because we are a community that has a lot of government jobs, we're an education community, a lot of universities, a lot of colleges. And we're tourism. We have this eclectic mix of businesses. We're somewhat buffeted. We're somewhat
maybe shielded in a way.
Yeah.
Yes, right.
And so a lot of the communities that may be manufacturing based, maybe more industrial, might feel these kinds of things more dramatically. The news with Cisco laying off. This area tends to be a little bit safer. It lags sometimes. If we go back to 2008, 2000, it didn't happen to a year or two later that we really felt the slowdown. But because we have this diverse economy, that really has helped shield people. Well, still, people's incomes aren't going up enough. If people are government employees, a lot of in the education system are not seeing their wages increase to keep pace with inflation. The number one thing is going to be keeping your budgets, keeping it living within your means. Things that our grandparents or our parents looked at it and said, you know what, don't spend what you don't have.
Yeah, right. And when you talk about that delay, that's pretty apparent whenever you talk about tourism, because the people from these manufacturing states are the ones that come here for vacationing and whatever.
Yeah.
So eventually it catches up to them, so eventually it catches up to us.
Yeah.
The thing that you always advise, which I think of all the time, is just that slow it down, pay attention, take all of the information in, and just make measured steps.
Yeah, it's like a farmer going out in the middle of the season and measuring the crops, seeing how things are looking. What we have to do is read the tea leaves, look at what the market's showing us. It's a little weaker, but take gauge, take stock on it. Don't panic. Be informed.
Good. I hope you don't feel that that's redundant, because it's just a central theme to managing your money well, and apparently you're pretty good at it.
Thanks, Jesse. I try.
Yes, you do try. I find these conversations fascinating. Thanks.
Thank you very much. Appreciate it.
See this interview again? Head to our website, looktvonline.com.